Are you a military veteran, past or present, looking to purchase a property soon? Well, if that's the case, you're in luck because today I'm going to share with you 11 benefits of using your VA loan to purchase your next property. So let's go ahead and get into it right now. Hey, ladies and gentlemen, if this is your first time watching one of our videos, I'm going to welcome you to the community. And if you want the most thorough, deep dive, all things Los Angeles, well, this is the channel that does just that for you. So go ahead right now, smash that like button and subscribe to the channel and send us an email, shoot us a text, give us a call, and we got your back when making a smooth move to Los Angeles, California. My name is James, and we get tons of calls and emails from people just like you every day, ready to make a move to Los Angeles, California, and we absolutely love it. So if you're looking to make a move to Los Angeles, go ahead and shoot us a text, send us an email, give us a call, and we got your back when making a move to Los Angeles, California. So let's go ahead right now and get into the 11 benefits of using your VA loan to purchase your next property. So number one is going to be there's no down payment required to purchase your property when using your VA loan. So that means that you can finance 100% of the loan and you don't have to put down any money up front, unlike a conventional or an FHA loan where you have to put down a minimum 3.5% or a minimum 20% on a conventional loan without getting hit with private mortgage insurance. So that's the beauty of being able to use your VA loan for your next purchase. Benefit number two, there is no insurance premiums or PMI or PIM. So with that being said, is when you have a conventional loan, if you don't put down at least 20%, the lender tacks on what's called PMI, private mortgage insurance, and that's an additional fee. So that way they feel secure that they're going to get their loan paid back. And when you have an FHA, it's called MIP, it's a mortgage insurance premium. And once again, it's another fee that's tacked on to your mortgage. So the lender is certain that they can get paid back in case you default on the loan. So the beauty of using your VA loan is that you don't have to worry about any of those additional fees tacked on when obtaining your VA loan. So benefit number three, and that's going to be that the government is backing your loan in terms of they guarantee your loan. So how that works is that, let's say you're not able to make a payment 1 month or 2 months. So the government is actually going to kick in a certain amount of money, and they're going to pay the lender that you obtained the VA loan from. This way your lender can feel confident that they're going to get paid and you're not going to default on your loan. So the VA loan is guaranteed by the government, opposed to other loans like conventional and FHA. So that's number three. Number four is that you can actually shop for rates. So the VA loan, the Veterans Administration itself, they do not create the loan for you. So it's actually different banks and lenders out there that actually will have the mortgage for you, and you're able to go to various institutions, banks and lenders to shop the best rate. Each bank and lender is going to have their own products, and each product is going to have its own rate attached to it. So whether you're paying 3%, 4%, 5%, that's going to depend on the actual product you get from that particular bank or lender. So that is benefit number four. Number five is that there's actually no prepayment penalty. So what you're able to do with that and how that works is that if you wanted to pay off the loan early or sell the property, you're not going to take a hit for those items, and you're not going to get hit with a prepayment penalty. And that's another beauty of using your VA loan, and that's why so many people enjoy using it. So you don't have to worry about spending an extra money on a penalty fee. Okay, that is number 5. Number 6, VA loans come in many different varieties in terms of fixed or adjustable. In that sense, meaning that if it's a fixed rate, your loan will be, let's say if you have a 30-year loan, it'll be fixed at, let's say you have a rate at 4%, and the 4% will stay locked for all 30 years of the property, or until the mortgage is paid off or you sell your property. And how a variable loan would work is that you might have, let's say the first 5 years are fixed, and then the remaining years on the loan would be adjustable according to the index that the loan is tied to. So that's another beautiful part about getting a VA loan, is that you have choices when choosing if you want to lock that rate in or get the adjustable on that. And number 7 is that easier to qualify for you opposed to a conventional or FHA loan. So that means the qualifications when you fill out your application, even though you're a veteran, past or present, you still have to fill out applications, and you still actually have to qualify for the loan. They're not just going to give you a loan. They do have to check your credit, your income, things of that nature, like they do any other loan. But the qualifications themselves are a lot easier. So that is a benefit to you, opposed to trying to go out and get a conventional or a FHA type of loan. So number 9 is your closing costs are lower. And so how this works is when you have let's say you're purchasing a property and you're in the state here of California, well, your closing costs typically on a conventional or FHA loan are about 3 to 5% of the purchase price. And so whatever the lender has required on your end, your closing costs are going to be cheaper than the traditional method, and that will help you obviously save money as well. So there is on number 10, there is what's called a funding fee. So a funding fee, the funding fee is basically a fee that the lender is charging you to actually do the loan. But the beautiful part about it is that you can actually take that fee and absorb it into the loan, where of course you don't pay anything out of pocket. So that's why it truly means it is a no cost, no money down, true loan. And it's a certain percentage again of the purchase price of the property. And so you'll have to work that out with your lender, whatever that's going to be. So that's called a funding fee. And next is that VA loans are assumable, and this is something that's really important. So if another veteran, let's say, is going to purchase your property and they qualify for the loan, that person would actually be able to assume your loan, and that means take over payments and take over the loan itself to continue that loan, opposed to getting a brand new loan. And this is something that is not offered usually on conventional or FHA loans. So that is a huge benefit to you and the person, of course, purchasing your property. And number 11, so VA loan rates themselves are actually cheaper than conventional or FHA traditionally. So let's say the average loan right now on a 30-year fix for conventional is at 3.5%. Well, for a VA loan, you might have a average of 3%, whatever the case is. Once again, it's lower based on your lender or bank you go to, and of course what you're qualified for. So those are the 11 benefits that are going to help you purchase your next property. Now, I just want to add in a few of the cons so you're aware of these when considering doing a VA loan. So what I mentioned before, there is the funding fee, which you're going to wrap most likely into the loan unless you want to pay it up front, so you don't have to have any money coming out of pocket. You can only use VA loans on your primary resident, meaning that if you already have a property and you have not used your VA loan, you can't go out and buy a second property, like a vacation home, and use the VA loan unless you spend more time in the second property than you do the first one. So that's going to be another situation where you have to talk to your lender and find out what situation is best for you. So consider using your VA loan for a second property if you intend to be in it for more time than your current property. So the next one, the next con is that the seller might not accept your offer based on your VA loan because of the special requirements opposed to a conventional or FHA loan that somebody else is bringing in. So let's say a seller has their house up for sale and they obtain 5 offers. Well, if they see your loan is a VA loan and you're only qualified for so much money, and the seller might not consider that because they do realize there are more restrictions in terms of the VA loan itself. So I just wanted to share with you a few of the cons, but as you can tell, there are many more positives for using and obtaining a VA loan. And if you're thinking about buying or selling here in Los Angeles, then the only way we can help you is that if you reach out to us. So go ahead, shoot us a text, send us an email, give us a call, or jump on our calendar, and we've got your back when making a smooth move to Los Angeles. Until the next video, we'll catch you then.